Hey, howdy, friends. It's Steve DePoe here with the Rose Realty team with this week's real estate vlog for North Texas. Hey, today we have a special vlog for you. We're going to be talking to a good friend, Monty Feltz. He's the branch manager of the Hallison Group, which is part of Cross Country Mortgage. They're a mortgage lender, actually a mortgage broker. They're out of Highland Village, but they operate throughout the entire state of Texas and beyond. And so Monty agreed to do a little interview and a little conversation with me for this week's vlog, talking about the housing market and the real estate market in North Texas. And I hope you get a lot out of it. So we're going to that. We're going to that interview right now. Hey, howdy, friends. It's Steve DePoe here with the Rose Realty team with a real special vlog this week. We're here with Monty Feltz with the Hassan Group here in Flower Mound.
Yeah,
I thought it was
Highland Village. Technically, over the line.
Highland Village, Flower Mound, something like that. Hey, today's topic is the real estate market in North Texas. Monty, what do you say? First, tell us a little bit about your company.
Sure. Yeah. So as Steve said, we're the Hallison Group of Cross Country Mortgage. Cross Country is currently the #1 retail lender in the nation. So what's funny is people haven't heard of us because we don't do the national advertising. We're really local loan officers that go work with realtors, help them grow their business. And so even if you haven't heard of us, that's why. You can Google, read about us. My group, the Hallison Group, I based that on Mount Hallison in Jeju Island, South Korea, because I lived in South Korea for 6 years working with ExxonMobil. And I wanted to kind of do a nod to my background in multi-billion-dollar oil and gas and what I learned in ways of building win-win partnerships with realtors, with buyers, helping them get what they want.
That's interesting. I've known you for a while, and I don't know that's why you named the company that. I thought it was somebody who was a backer of yours or something like that.
Don Hallison.
Interesting.
No, we did that also for SEO. It's really good. The word Hallison is nowhere out there, and it's pretty phonetic. So I also like the mountain image. So
yeah, kind of cool.
Yeah.
Hey, so we just came back from our family reunion a couple of weeks ago, and we got a whole bunch of data and a whole bunch of information about the market, what we just got out of, what we're going to be going into. And I'd like to get your opinion of what we look, especially here in North Texas, what we expect to see, let's say, in the next 6 months.
Sure. Yeah, great question, Steve. So love family reunion, by the way. Y'all are really cool in the way that you do that with Keller Williams, the way you're super deep.
18,000 people attended.
Wow, that's incredible. Yeah, what a cool thing to work with a realtor who is in a group of 18,000 people to get together, help each other grow. I do have to say the Rose Realty team is exceptional. I work with realtors all over the nation. We're all 50 states, so I can do a loan in any state. But there's a difference working with somebody like Steve and Rose. It is incredible when they're at their level, the way they're executing, the way they're taking care of you. We're going to talk about multiple offers in a little bit and what a difference it makes to work with somebody like them instead of just that friend at church that has the real estate license, or your friend or your family member that's a realtor. All realtors are not created equal.
Well, we appreciate that, Monty. Thanks.
Well, yeah, happy to say that. It's the truth. So as far as the market goes, what we see, this is the year of the fives. That's what we're calling it. Year of the five, because what we've gotten from Zillow, National Association of Realtors, Goldman Sachs, all these different experts, economists, they're saying that home prices will appreciate at least 5% this year. Now, what that is across the nation. That's not North Texas. North Texas, last year we had 475,000 people move to Texas. That's 1,300 people a day. 1,000 of those were up the 35 corridor. So we're getting tons of people coming here. That's going to make home values go up even more. So I would say it's closer to 10%. I'm not an expert in that space. I'm just saying, mathematically, if it's already going at 5% and then supply and demand is pushing more people into Dallas, the home prices are going to go up. So it's a safe market.
Sure.
To invest in. My house went up 34% the first year I bought it 3 years ago. So I'm good for these 3 years at 10% a year already.
Sure.
So
we have a number of customers right now, or potential clients who are sitting on the fence waiting. We're waiting for that. We're waiting for the bottom to drop out, prices to come down 15 or 20%. we've been telling them for 2 years that that's just not going to happen. But they listen to either the national media or their friend who's a banker in New York, something like that.
Yeah.
Talk about that for a second.
That's probably the biggest thing I have to combat. Last year, if you were watching, the media said a lot of things about a housing crash and home values were going to go down. Well, they didn't. Now the data's out. They didn't. They went up between 6 and 8% last year. So if you did buy last year, then you're in a better position today because you did that. Even though the interest rates were high, you're still in a better position because appreciation outpaces interest rate any day of the week. I'll give you a few examples in a minute of what that would look like today if you were to buy today versus you were to wait a year, even if rates drop a ton. But it really is a media full of negativity because that's what sells. And so when you can scare people, rates are going up this week. Well, yes, they did slightly in the past week, but it was slightly. It's not anything that would change your decision, nor anything that would cost you money in the long run to not get in it. So we have a phrase we say, you got to be in the game to win the game. And it's more about time in the market instead of timing the market. People just don't get rich trying to buy at exactly the right time.
Right, because you can't actually time it exactly. Yeah. You're either going to buy when it's still going down or still going or starting to go up. Correct. And you're not going to get that bottom. What's the cost, do you think, of like a waiting? I mean, if you decided, hey, geez, I'm going to wait for 6 months because I'm just not sure. Maybe you have money for a down payment and you've got a good credit score, et cetera. What's the cost of waiting?
That's a great question. I would say even if you don't have a good credit score, there's still a cost of waiting. So don't hear this and say, only if I have a good credit score, I'm going to wait till I get my credit up. We talked to a lady yesterday, had a credit score in the 500s. It's still possible. We're still able to do it. So I would say don't count yourself out for that. But the cost of waiting, I'll give you two examples. One would be nationally, the 5% appreciation. If you were to buy a $500,000 house right now and put 15% down to avoid PMI, now you may think I said that wrong. 20% typically avoids PMI. But if you do have a credit score of 740 or above, we have something called buy-by PMI. So we'll pay the PMI. We'll take away the private mortgage insurance from that loan so that you don't have to put as much money down. So let's say that's what you had. You had a credit score above 740. If you didn't, you could do 20% down to avoid PMI. That's not necessarily the right thing to do. Even if you have a small down payment, I can show you how much more you make just by getting a house instead of renting and paying 100% interest rate. That's what it is on rent. You're not making any money. But if you put 15% down on a $500,000 house and rates were at 7.375 right now, which they're not quite that high. But even if they were, and even if in a year the rates drop to 5.49, which I don't think they will a year from now, I don't think they'll be quite that low. I think they'll touch the 5. So the year of the 5s is 5% appreciation. It's 5% interest rate, meaning like a 5.99. We believe by the end of the year that will be possible to get. And so let me give you one other statistic. When rates drop by 1%, which that would be a 1% drop in rates, 5 million new buyers come on the market nationwide. So you suddenly have way more competition. So think about that as we talk about the other side of this scenario. So you bought $500,000 house today, 15% down, 7.375 rate. Or you waited a year and you bought that same house, still put 15% down, and you got a 5.49% rate. What you would have lost with the 5% appreciation would be $37,000. You'd be further behind because if in a year rates are at 5.49, you could also refinance that 7.375 down to a 5.49. But you would have gained in equity $25,000 because 5% times 500,000 is 25,000. You just made an extra 25,000. The other difference where the 17,000 comes in, the 12,000 difference in the 25,000 is because your monthly payment is higher forever on that house next year. Even though it's a 5.49 rate, you financed more than you would have had to here. So you have a $2,500 a month principal and interest payment instead of a $2,400 a month principal and interest payment. You're going to have to watch that again probably and go slow because I know that was a lot of data, but I want you to go through that and listen. The numbers show you that the cost of waiting is dramatic. If I'm right and properties go up 10% in DFW, so if you're talking about North Texas and they really go up 10%, the numbers are 84,000 that you're worse off instead of 37,000 to have waited. So that may be more money than you make in a year. So all you'd have to do is buy a house and you get an extra year's worth of salary just because you made a good decision.
So essentially, waiting 6 months, 12 months for hopefully a prayer that the interest rates go down is actually costing you and your family part of your family's wealth, and you're going to be paying. You're going to be paying more. You're going to be paying on a higher amount than you would if you got in today.
Absolutely. Warren Buffett said you buy when everybody else is going away, and you go away when everybody else is buying. So don't follow the herd. Don't do what everybody else is doing. You've got to be different. That's how the rich got rich. They got into real estate and they bought when others were fearful, and they were greedy when others were fearful, and they were fearful when everybody else was greedy. Like I said, 5 million new buyers are going to come on the market when 1% rate drop happens. So that means that all I'm assuming in these scenarios is appreciation. That does not take into account what you and Rose are going to have to deal with, offers over the asking price. So if you're going to wait, you also need to think about the reality of your offer is not just going to be that purchase price going up $25,000. It's also going to be how much more can we give them to win this, because we're competing against 10 other people. When we bought our house, we were one of 11 offers. We had to offer $52,000 over the asking price. Do a
one of those.
We were. It may not quite be that bad this summer and this fall, but if rates start to drop, we've had 2 years of pent up demand. Inventory is not there to support that. We've got about 2.5 months of inventory based on our analysis right now. That's not enough to handle how many people will want to buy. And on top of that, you've got the summer is always a hot time to buy. Families have to move. School's out. We got to do it. So you're going to be up against people that are desperate, and desperate people offer desperate things on houses.
True, right. Hey, just as an aside, a couple of weeks ago, Rose and I had a phenomenal month in terms of in terms of selling our listings and buyers coming in. And if what you say is true, then in 3 months it's going to just be against the wall, and these people who are on the fence are just going to unfortunately miss out.
Yeah, it's true. They would. They might not totally miss out, but they're going to need to change their mindset and know that it's going to take doing different things, making offers, doing 10-day closes, offering a full appraisal waiver. You can do it, and it's not wrong to do it then. It would be better to buy then than to not buy at all. You'd still be better off. But you have an opportunity right now, this short window of opportunity to really get a great deal, because you make all your money on a house when you buy it, not with the interest rate, not when you sell it. You make your money on the buy side of that house. So for anybody out there that owns a home and is thinking of selling it, this would be a great time really to do that, because of all of this going on. You want to get with Rose and Steve and discuss, what would my house go for right now? What does that look like for us to go get a great deal on another house? Don't be greedy and wait till I want 25 offers on my house. That's true, but the flip side of that is you're going to be one of 25 offers on another house. So,
and a lot of people really, I think they've all heard these numbers, some of them that you've talked about, like your house when you bought it, 3-4 years ago. And they don't really realize what their equity is they have built up in their house, that they could sell, take that equity and buy a house for cash right now.
Totally.
Or if they wanted to upgrade, they have a much smaller mortgage. Okay, the interest rate might be higher than when they bought, 10 years ago. But as you said, don't wait, get into the market now.
Right. The other thing you can do is buy an investment property.
Sure.
You can help people build wealth by getting somebody else to pay the mortgage on the other house you now own. That's a great strategy. Buy a house a year, make it your primary residence, move into another house a year later, rent this one out. We take that off your debt. There's things we can teach people that want to learn about building wealth in real estate, and when's the right time. Show me the numbers for me specifically with my credit score.
Actually, one of the things that Amani's talking about right now is real estate planning, which is something that Rose is our team leader for real estate planning, and we're really ramping that up, talking to like you said, investors, our seniors, et cetera. And it's all a way to help grow and protect your family's wealth.
It's so good.
Yep. Well, Amani, I want to thank you for being here today.
Of course. Yeah.
This is Steve with the Rose Realty team. See ya.